For decades, the US dollar has been the backbone of global trade and a symbol of American power. But in early 2025, its share of global reserves fell below 58%, a warning sign of shifting power. This decline was fueled by rising US debt, changing alliances, and nations like China and Russia building alternatives to the dollar. The dollar's dominance, once seen as stabilizing, was now viewed as a tool of US policy. Other countries wanted to escape. The world's financial system, built on trust in the dollar, suddenly looked fragile. A single shock could trigger a global crisis, threatening wealth and stability everywhere. The stage was set for a dramatic confrontation, as a familiar political force returned to the White House, promising to shake things up. The world braced for the next act in the drama of the American dollar. The spark came on a tense Monday morning. President Trump, back in the Oval Office, issued a blunt ultimatum. China must immediately reverse its export ban on critical materials. He gave Beijing 48 hours. No negotiation, no compromise. Markets panicked before his speech even ended. The dollar plunged, losing 3% of its value in under an hour as traders fled to safer assets. This was more than a market blip. It was a global vote of no confidence in US leadership. Investors saw Trump's move as reckless, risking a full-blown economic war. The dollar, once the world's safe haven, became the epicenter of chaos. Instead of forcing China's hand, Trump's ultimatum triggered a financial stampede away from the dollar. The sharp decline was a stinging rebuke of his strategy. The economic shockwaves were just beginning. China's export ban was a strategic blow, not a minor trade spat. Beijing halted shipments of rare earths, pharmaceutical ingredients, and key electronics, materials vital to US industry and security. American factories stalled, tech giants faced shortages, and pharmacies warned of dwindling medicines. The ban exposed America's deep dependence on its rival for essential goods. It was a clear message. China was willing to weaponize its supply chain dominance. The world watched as decades of economic interdependence unraveled. Other nations began questioning their own reliance on China. This was more than policy. It was a declaration of a new era of confrontation. The Great Wall of Trade was up, and the US was caught off guard. Trump's high-stakes response would push both nations and the world toward crisis. The impact of China's ban hit Americans fast. Store shelves emptied, electronics vanished, medications ran short, and prices soared. Used car prices spiked, and basic electronics became luxury items. Inflation hammered working families, exposing the fragility of America's offshore supply chains. Years of prioritizing efficiency over resilience left the US vulnerable. Rebuilding domestic production would take years. The crisis fueled public anxiety and political pressure on the White House. The narrative of American decline was no longer abstract, it was reality. Trump faced a nation demanding action, as economic pain and national vulnerability mounted. The stakes for his presidency and the country had never been higher. The pressure was on to deliver a solution. Trump's ultimatum was a calculated gamble. He campaigned on America first, promising to stand up to China. The export ban threatened his core promise. He had to act decisively. Trump's team believed America's consumer market gave them leverage. China needed US buyers more than the US needed Chinese goods. The goal was to force Beijing to back down and reset the relationship on US terms. Trump's style: create a crisis, then negotiate from strength. But this approach underestimated China's willingness to endure pain for long-term goals. The ultimatum became a global game of chicken. With the world economy at stake, Trump was betting everything that China would blink first. China didn't wait for the deadline. In a swift press conference, Beijing condemned Trump's demand as blackmail and refused to budge. US markets plunged again, realizing this was the start of a drawn-out economic war. China announced countermeasures, accelerating the digital yuan and rallying its people for hardship. This was a full-scale mobilization, not just a policy dispute. Trump's team miscalculated. China's leaders prioritized sovereignty over short-term economic pain. They were ready to absorb damage to prove they wouldn't be dictated to. The world saw China's defiance as a declaration of co-equal power. The US-China standoff had entered a dangerous new phase. The global order was shifting before everyone's eyes. The stakes had never been higher. The next morning, global markets collapsed. The Dow plunged over 2,000 points at the open, one of the steepest drops ever. Investors scrambled to sell, overwhelming the system. The dollar's slide accelerated, its reserve status now in question. International investors pulled out, fueling inflation and eroding confidence. The meltdown spread worldwide. London, Frankfurt, Tokyo, all suffered massive losses. Supply chains shattered, trade froze, and recession loomed. The interconnected global economy transmitted panic at lightning speed. Trillions in wealth vanished in hours. The fragile confidence holding the system together was gone. This was no longer a trade dispute, it was a full-blown economic conflict. The world had crossed a point of no return. That week didn't just rattle markets, it rewrote the rules of global power. The US and China moved from competition to a new economic Cold War. The trust that fueled decades of trade was shattered. Both sides began decoupling onshoring industries, restricting tech and building rival systems. The seamless global economy fractured into competing blocks. Nations and companies faced a stark choice: American or Chinese sphere. The result? Higher costs, inefficiency, and slower growth. The dollar's decline removed the central pillar of global finance, adding new risks. The US-China rivalry now shaped everyday life prices, jobs, and financial stability. The world entered a more divided, volatile, and dangerous era. These events aren't just headlines, they affect your savings, your job, and future. The dollar's decline and rising tensions mean higher prices and job uncertainty. Old investment rules may no longer apply. Was Trump's move bold leadership or a catastrophic miscalculation? Some say confrontation was overdue. Others call it a self-inflicted wound. What's your take? Share your thoughts in the comments below. For more context, check out our essay, The Quiet Erosion, on the forces behind today's crisis. Staying informed is our best defense as we navigate this uncertain future.